Welcome to Property Addicts Australia, your home for everything property investing. Get an insider's view of what really works when building a portfolio. Learn how to avoid the common mistakes, plus get all the tips and tricks from the property investing experts Sana and Mona Ali. Join us to learn from the experts and set yourself up for long-term success in property investing. Proudly powered by propertytwins.com.au.
Welcome to the Property Addicts Australia podcast. We are Sana and Mona Ali, the Property Twins. We're mortgage brokers and buyer's agents helping clients all across Australia build successful investment property portfolios. In this episode, we are joined by Terry Ryder, founder and managing director of Hotspotting, one of Australia's most trusted property research platforms. Terry has been analysing real estate trends for decades and has built a reputation for identifying tomorrow's growth markets today before they boom. In this episode, we dive into the biggest property market trends shaping in 2025, why interest rates might be overrated, and what really drives price growth. We also talk about the data versus human judgment debate when picking hotspots, and we touch on which suburbs and regions are set to shine in the next cycle. Whether you are a seasoned investor or just getting started, this episode will sharpen your strategy and help you avoid the common traps. Let's get started. Terry, welcome to Property Addicts Australia. Great to have you here.
Nice to be here. Always happy when I'm talking about real estate markets around Australia.
Thanks, Terry. So to kickstart this podcast today, we'd love to know a bit about your journey, where you started and your history as a property investor.
Yeah, I started out, in fact, as a newspaper journalist. I studied journalism a long time ago and was working in newspapers like the Courier Mail in Brisbane and the Australian Financial Review. Early in that journey, I became a property editor, and it became a specialty that I carried through my journalistic career as a person who researched and wrote about real estate. And then I went out as a consultant in the industry, and I continue to write about real estate. I was doing a series of articles for Money magazine, in fact, about 20 years ago, writing about locations that had outperformed other markets that had outperformed the norm, and identifying the reasons why they had been outliers in the property market. And while I was doing that series of articles, it occurred to me that there was a business in it. So out of that, I started Hotspotting just on 20 years ago, and it sort of evolved from there.
And you're a property investor as well yourself, obviously, as you did that journalism and commentary, you were building your property portfolio. Tell us a bit about that.
Yeah, I guess I was a late bloomer in terms of building a property portfolio. Back in the 1980s, when I bought my first home, property investment as it is today, with a lot of people out there as investors creating and developing portfolios, was not so normal. And I didn't understand in those days the value of buying good assets and keeping them. So I was buying and selling real estate. Perhaps I was in my 40s before I really started seriously looking at property investment as a tool to growing wealth and providing for retirement and essentially building a portfolio.
So if you backtrack, what would you say to your younger self, that should you have started earlier, or would the outcomes have been a bit different if you started a bit earlier?
Well, I think I actually started early in terms of buying real estate. I was in my 20s when I bought my first home. What I didn't understand there, and what I would say now, is my mantra for people generally is never ever sell. If I'd understood that, and I think of what I paid $25,000 for my first house in a suburb of Brisbane. Today would be worth perhaps $750,000. But particularly my second one, I moved closer to the centre of Brisbane. I was about 10 minutes from the CBD, and a humble house that I paid $50,000 for was on a great block of land. It was elevated with views up the Brisbane River towards the Gateway Bridge. The land alone today would be worth well over $1 million. But back then, I was buying and selling. I sold that $50,000 house for about 120, and I thought I was a genius because I'd had such great growth. But imagine how much greater my wealth today would be if I still owned it. And that was the lesson that I wish I knew then that I know now.
I guess markets are very, very different today, right? Like in the year 2025, it's so much more expensive. So do you think someone starting out today could do the same, or would they be able to build a property portfolio?
Oh, absolutely. I think it's all relative, isn't it? It does seem incredibly cheap that I bought my first home for $25,000, but relative to the income I was earning at the time, it was still a lot of money, and I had to save really hard. I decided I was going to do it, and I for a year I just spent nothing. I didn't go out. I didn't eat at restaurants. I didn't go out to pubs with my friends. I just stayed home and saved money, so I could get together a deposit to get that first home. And I think it's pretty much the same today. You don't get into the property market without making sacrifices and compromises. But there are opportunities today, even with the high prices that we have, to find affordable property and get into the market at a level that young people can afford.
For talking about that, you know, the snobbishness that comes with I want to live in a certain suburb versus start out with, you know, humble beginnings. Like there are people, right, who are just focused on, say in Sydney, I want to start my portfolio in Bondi.
Yeah, I just don't think that's realistic unless you have a lot of help from wealthy parents. Like I don't think you get your foot on the property ladder without making compromises and sacrifices. Nobody gets their dream home and their dream location as a first purchase unless you do have, you know, wealthy and benevolent parents. So you do have to make some compromises to get started, but I think it's worth it because in a relatively short space of time, if you buy in the right places, you might buy your first home somewhere that is not your dream location, but in 5 years, if you've selected well, it may have you in a position where you can actually buy your dream home in your dream location.
So looking at 2025, what do you see happening for the rest of the year? We are in May 2025. Like what's projected to happen this year?
Look, it's overall, I do hate generalisations about real estate because I think there's too much of that in media and from economists. We don't have an Australian property market. We have lots of local markets. But generally speaking, it is a pretty solid year for real estate. We've just had another interest rate reduction. It's not going to have the massive effect that media would have us believe on markets, but it certainly helps because we've now had 2 reductions, and that allows people to have greater borrowing capacity and lower repayments as they get into the market. So that helps, but we already had a solid year. We have the conditions for prices and rents to continue to rise in Australia because we have high demand and we have very low supply. And high demand is continuing to be boosted by a pretty solid economy nationally and particularly in specific local areas. And we have very high population growth fueled by high levels of overseas migration. So demand is high and supply is very low because the nation can't build the number of homes that we need for a whole host of rather sad reasons. We have a housing crisis and there's no solutions in sight at this stage. So while that's a problem for the country, it's also an opportunity for investors because it does mean that rents and prices will continue to have upward pressure.
Some people look at obviously the global economy and they are taking whatever's happening in the world into account. Do you think external forces impact property markets or not really because the supply is so tight?
Yeah. I really don't think they do to any great degree, and we're often told along the way that global situations are going to impact the global financial crisis. And around 2008, for example, the predictions were that property values in Australia would drop 30-40%. Of course, that didn't happen. I remember one of the high-profile media performers, a chief economist for a major institution, forecasting a few years ago that the war in Ukraine was going to cause Australian property prices to fall. But those sorts of things really don't have any material impact on what happens with Australian real estate markets. I believe very strongly that real estate is local, really local, but certainly what happens in Australian property markets is 99.9% driven by what's happening within Australia in terms of the economy, population growth, and all the other trends that are relevant.
How much do interest rates impact the markets? Is it low? Interest rates, are they really overrated then?
Well, I really believe they are. Media loves to play up the interest rate card, and a lot of economists, honestly, I think Australia's very poorly served by the so-called analysis we get from senior economists, like the ones who are senior economists for the big banks, in terms of their commentary and so-called analysis on real estate. I don't think they understand it terribly well. And they seem to think that interest rate trends are the big factor. So at the start of pretty much every year for the last 4 or 5 years, we've had big bank economists forecasting Australian property prices are going to fall across the board because we've had rising interest rates in 2022, 2023, and since then, very stubbornly high interest rates until the recent reductions. And because of that, because they think interest rate trends are paramount, their forecast prices will fall. And of course, we haven't had that happening except in isolated cases. And in media recently, with the first reduction and the prospect of the second one we've just had, a lot of media rhetoric that markets are going to take off. But I don't think it's going to happen. Markets were doing what they were doing already this year. The interest rate reductions don't hurt, but they're not going to precipitate a property boom anywhere. It's grossly overrated as a factor. There are far bigger forces in the market that have an influence on what happens with property prices than the level of interest rates. If it was all about interest rates, we'd have the same thing happening everywhere, wouldn't we? If high interest rates mean prices will fall, well, we would have that happening across Australia. But we've had booming markets in many of our capital cities and many of our regional markets during that period of high and rising interest rates. So,
well, it reminds me of going back in 2010 when we started off as first home buyers. I used to read some articles in the Sydney Morning Herald, and every other day there was a different take of what was going to happen with the market. And the journalists would one day say, well, the market's falling, and another day it's going to take off. And I was like, well, they need to make up their mind as to what direction we are heading in, really. So just people should only take it with a grain of salt, what they're reading, and do their own research.
Yeah, I agree with that 100%. Quite often I say to people when they ask me, what are the keys to successful property investment? I always say, I begin by saying rule number 1, stop reading newspapers, stop tuning into the white noise in media, because you're only going to get misinformation and contradiction there. Look, fundamentally, I'd have to say that journalists don't really care about anything except generating headlines and clickbait. They're not interested in helping us. They're not interested in informing us. It's all about the headline, the sensation, and the clickbait. And so that's why you get the factor that you're talking about, all these contradictions. And I would also say that the people writing those articles and headlines are not real estate experts. I'm dealing with Australian journalists all the time. We get lots of calls asking for views and information. There are no experts on real estate amongst them. They're just journalists who have been given the job to write about real estate, and they're mostly recycling press releases from people with a vested interest in the message. So it's just what I call the great seething mass of media misinformation. And I urge anyone who wants to be successful with property investment to just tune out all that white noise, ignore it, do real research, and tap into real advice. Talk to people like you who you've been doing it yourself as property investors, but also as advisors for quite some time. You know the territory. People should be talking to people like you rather than listening to non-experts who write articles or express views in media.
So people need to get the right advice, do their research, and not just believe anything and everything they hear or read online.
If they try to believe everything they hear on, they're going to be very confused people, because as you've pointed out, there's so much confusing and conflicting information. And it's just very wise to ignore all of it. Invest in information and invest in good advice. I think that's the thing that too few investors do. I think what distinguishes the successful ones, the ones that have substantial portfolios, from the majority who just have maybe one property or two and never quite get to where they're trying to get to as investors. What distinguishes those two types is the successful ones invest in good advice and good information. They build, what we say to people is build your team before you build your portfolio. And it's really important to have a good accountant that understands real estate, a good mortgage broker that you trust and knows the market, a quantity surveyor for depreciation, buyer's agents who are good at what they do, because there's plenty out there that are calling themselves buyer's agents that really shouldn't be operating, but ones with experience and knowledge. Create a team of people that you trust around you, and talk to them and take their advice, and then do real research, get good information sources, be informed, and make decisions. People who do that buy properties in the right places, and they grow and create equity, which helps them create the opportunity for the next one and the next one. And very quickly, someone starting young, following basic principles with good advice and good information, by the time they're 40, they can, if they choose, they can be in a position to quit their day job and live life on their own terms.
Terry, talking about like different markets, so obviously hotspotting is very much focused on research, and it's been a great tool to really follow where are the major infrastructure changes happening. Could you please touch on property markets being local rather than national? Because I know there's property cycles, there's so much out there, local versus national. How do you, what's your take on that?
We believe that fundamentally real estate is local, and we mean right down at the local level. There's no Australian property market. If there was, we'd pretty much have the same thing happening everywhere in the country in terms of what's happening with prices, and we don't. Quite clearly, we don't. I mean, if you look at 2024 as an example, we had 3 capital cities with boom level price growth. We had a couple of capital cities with moderate price growth. We had one with pretty much stagnant, and then we had one like Melbourne where prices were falling a little. And then throughout regional Australia, we had all of those differences in play. Why are some markets booming and others are going backwards or stagnating? And the answer is because real estate is local. Real estate markets arise out of local economies. It's all about the economy, we believe. If you get one of our location reports, you'll find it might be a 20-page report, but only maybe 4 or 5 pages are talking about what's happening in that property market right now. The rest of it's devoted to the local economy, because that's where the growth or otherwise in the property market arises. Is the economy growing? Is it diverse? Is it creating jobs? Is there an infrastructure spend happening? And out of all of that will come demand for real estate, because a growing economy and creating jobs, infrastructure being created, that creates economic activity and employment, and from that comes demand for real estate. So it's what's happening locally in those areas that matters the most, not interest rates, not what's happening in the national economy. So it's finding those places with those strong, vibrant, growing local economies with a significant infrastructure spend as a simple formula for buying in the right places.
Well, I know you touched on buyer's agents. There's so many of them, and all of them are talking about data. What you're speaking about is the fundamentals, and that's something we've followed from the start in our own journey. But what's your take? Like, there's a lot of gurus out there talking just about data.
Yeah, I think there's perhaps an overemphasis on data, or perhaps more accurately, some people focus on the wrong data. Now, the reality is most real estate data is backward-looking, and with what we do at Hotspotting is we're always looking for forward indicators. We want to look forward and try and predict the future. There's no point in telling people about the places that are booming now, because that means you're telling them where they should have bought 1, 2, 3 years ago. We want to tell them where to buy now so that they'll be getting that boom level growth in a year's time or 2, 3 years' time. But we always take a long-term view. So we're looking to identify areas that have got sustainable long-term growth. So we don't care about what's happening with prices in the area now. Quite often we recommend an area where price growth currently is very flat. That's the ideal time to buy in a market, provided you have reason to believe it's going to start to rise in the near future and keep on rising. So we're looking for forward indicators. We're not so interested in what's happened with prices in the last 12 months. Now, sales activity is a great forward indicator. And every quarter we analyse the trends quarter by quarter, with sales activity in every town and suburb in the country. And I'm well advanced with analysing the latest batch of data. And it shows incredibly interesting trends. But the key point is that it's a forward indicator. It takes time for an uplift in buying activity to translate into significant price growth. So if you know areas where sales activity is starting to rise, it's a good time to be getting into that market, provided it's got the other underlying fundamentals that we look for, because you can get in ahead of the price growth. And right now, it's really clear from the last 2 or 3 quarters that say Darwin is on a big upward path, but it hasn't yet translated into massive price growth. So good time to consider that market. Melbourne is starting to rise, and regional Victoria after a period in the doldrums. And we're starting to see a big uplift in sales activity in the suburbs of Melbourne. Those are useful things to know because they're forward indicators, far more so than what's happening with prices now. And I think it was Simon Presley of Propertyology who said that the markets that will be the price growth leaders 3 years from now are probably flat right now, and because of the way property goes through cycles. Perth has just had 3 years of big growth, but 4 years ago it had at a point where it had 10 years of falling prices. And when we started recommending it, people said, why are you recommending this market? It's just, these prices are terrible. So we think it's about to change, and it did. That's the right time to be getting into a market like that.
But there's also talk about regional versus capital cities. Like, how do you compare between the two?
Well, the reality is that the regions have outperformed as a general statement, and then you can come down to local level. But all the data that's come out from the major data houses like CoreLogic or Cotality now, PropTrack, Domain, and others show that the top performers in the last 5 years, and they've published figures recently because it's 5 years since COVID struck, have all been regional. The top 10 locations for 5-year growth are all regional. 18 of the top 20 are regional. And that's because of some of the dominant trends in the market. Now, that's historical stuff. Is it going to continue? Well, I believe yes. That trend we call the exodus to affordable lifestyle, it's been underway for quite some time. It wasn't inspired by COVID, as media has kind of misled us. They tended to think that because of the lockdowns, everyone left the cities and moved to the country. Well, that trend was underway long before COVID came along, and it continues. And it's about people moving from Sydney and Melbourne to smaller cities or regional areas for a different lifestyle, greater housing affordability, enabled by technology. It's more about technology than anything else. More and more people can work remotely now. Every member of my hotspotting team, we don't have an office. Everyone's working from home. And that's kind of the modern way. And so you can be anywhere to do what you do. So you decide, do I need to be in Sydney? It's incredibly expensive. I can't afford to buy a house there. Do I need to be here? Or maybe all your family's there, so you do want to stay in Sydney. But for other people, it's like, we don't need to be here. So let's move to the Central Coast, or to Orange, or to Goulburn or Wollongong, somewhere with the lifestyle we like, but the real estate is cheaper, and we're not that far from Sydney if we need to go there. And for those reasons and others, regions have been the big performers. And that's great news for investors trying to get into the market, because the best performers are regional, and they tend to be cheaper and have better rental yields. So it's a win-win-win for investors. Cheaper buying prices, better rental yields, really great growth if you pick the right location. So this is really good news for young people starting out.
And then what about houses versus strata properties? Because obviously, say, talking about Sydney, houses are so expensive. Like, what would you say to someone looking to buy? Like, many of our clients, when they come to us, they say, oh, I want an independent detached house, but that's not always possible in the budgets that we are working with.
Well, this is more good news for people in that situation, because the dominant paradigm has always been, people have always believed that houses on land show better growth over time than do attached dwellings, units, townhouses, apartments. But that's changed, and is strongly changing, because more and more buying cohorts are actually opting for apartments over houses for all sorts of reasons, not just affordability. We've got downsizers who want to something that's the 4-bedroom family home, the kids are grown and moved on, lots of maintenance, mowing lawns, tending gardens. They want something low maintenance, smaller, but good quality. So they downsize to an apartment. Young people starting out, apartment makes sense from a lifestyle viewpoint perhaps, but also from an affordability viewpoint. We have lots of population growth in Australia from migrants coming to Australia. Many of them are coming from cultures where attached dwellings are the norm, so they're very comfortable with that kind of lifestyle. So that's another factor. And then there's also the safety and security factor. Crime on the streets is becoming increasingly an issue in our cities, and people starting to feel less safe in a house at ground level and saying, I'd rather be on the 10th floor of an apartment building with security features. I'll feel safer and more secure. So we're seeing the market share of apartments rising and rising. And because of that demand, they're competing on capital growth really strongly now. And according to some recently published research figures, apartments outperformed houses in 60% of Australian suburbs in the last 12 months. And in Brisbane, it was over 80% of suburbs that there was bigger growth for apartments than for houses. So again, great news for people starting out. They're more affordable. They've got better rental yields. And quite often their location is really good. You can maybe afford, someone within my sort of circle of family and friends, young person starting out, bought a 3-bedroom apartment in the inner west of Sydney in the 700,000s. Houses are typically over $2 million. Mm-hmm. To get an apartment, a large apartment with 3 bedrooms in a location that good in that price range, you can do that with apartments. What a great way to start your journey as a property owner. Have a deal like that.
So someone who's starting out should not be turned off by the fact that they're buying a strata property. It's better to be in the market than not be in the market.
Absolutely. And sometimes we get asked the question, I've got a 10% deposit. I have to pay mortgage insurance. Should I wait and save 20%? It might take them another couple of years to get to 20%. In the meantime, values may have moved. You're much better to go now and take that hit with the mortgage insurance and get into the market now. That's certainly my view. If you've got the capacity and the desire to move now, then do so. Those who wait quite often regret it, I think.
And pay more. You're constantly chasing the market, and that's the same as buying an off-the-plan property that's not ready for 24 months and a developer puts in a sunset clause and you've missed the entire market just by waiting, whether that's for mortgage insurance or whether for the property to be ready. And Terry, obviously there's different markets in Australia, just going state by state. Perth is, as you mentioned, is at the peak. What about the rest of the capital cities? Where do you see, like, starting with, say, Adelaide?
Adelaide, I think it's the most remarkable market in the country. It's been growing for longer than any other location, and it just keeps on going. If you look at the price graph for any suburb of Adelaide, it's for the past 5 years, it's just steadily rising and continues to. I've just finished doing the sales activity figures for Adelaide and South Australia, and most suburbs have a very positive. They're continuing to rise, and I have to say, just a bit of personal at the coalface information. I've just actually sold a property in Adelaide just this week. Now, we had an open house at the weekend. We had 30 parties come through to the open house. I had 7 offers, and every single one of them exceeded my price expectations. I like to think I'm pretty well informed about property markets, and our research told me what that property was worth. Well, all 7 offers were more than what I thought it was worth. Stunning. But that's typical of Adelaide these days. It just keeps on doing really well. One of the key factors, and that comes back to my point about economies, is that South Australia has been and still is one of the top 2 economies in the country in the last, say, 2 years. It used to typically rank down towards the bottom, but it's really major changes happened. Adelaide's reinvented itself as a major centre for IT and education. It's a major resources state, and so it's become a serious contender economically, and that's helped to lift the Adelaide property market, which started this cycle, was a very, very affordable place. Not so much anymore because it's had 5 years of growth and it's still going. So, yeah, remarkable place.
But is it at the peak though?
Well, it must be getting close to it, but in the current numbers, it hasn't got there yet, where Perth clearly has. But Adelaide is still on the rise. I would have to say that it can't go on for that much longer in this cycle.
But Perth has the yields going for it. So investors who don't have the affordability are still choosing Perth because of the rental yields.
Yeah, well, they are coming down because prices have risen so much. I just think it's a bit dangerous for people to get into the market at this point of the cycle. You should have been there 2-3 years ago. And there's still a lot of media suggesting that the boom is just rolling on, but all the numbers say it's not. The thing is, why take that risk? Australia's a big country and there's so many places you can consider and where the yields are actually better than they are in Perth and the prices are cheaper and prospects for growth. You know, buying in a place with better yields and lower prices than Perth at the start of a cycle makes a lot more sense than getting into a market like Perth at the very peak of the cycle.
And how's Brisbane?
Brisbane's chugging along very nicely, and we've just been doing research on the Olympics impact because the Brisbane market's been on the rise. It's got a strong economy, it's got population growth, it's got big infrastructure spend, quite independent of the Olympics requirement. But that we now have decisions made about where the venues are going to be and what has to be built and how much is going to be spent. And so from now until 2032, Brisbane is going to have that extra impetus. And it's considerable because the research into other cities around the world that have hosted Olympics show that there is a big impact on real estate, but it's in the lead up to the event, not after it. It's because of the investment and activity to prepare for the Olympics and the focus that goes on the venues. And keep in mind that it's not the Brisbane Olympics, it's the Queensland Olympics. The Sunshine Coast gets a big chunk of it, the Gold Coast does, Toowoomba gets some of it, Rockhampton gets some of it, Cairns and Townsville will host events. So there's going to be a widespread impact for real estate across all those. Queensland has all these wonderful regional cities with lifestyle and affordability and more so than any other state in the country. And it's just going to get this ongoing momentum from the Olympics horizon.
And Brisbane feels more expensive than Perth and Melbourne these days as well.
Yeah, absolutely it is. And the median price data does show that it's well and truly overtaken Melbourne. It was always ahead of Perth, and Perth had great growth, but Brisbane has too. So that gap between Brisbane and Perth continues. So Sydney is obviously the most expensive city. Canberra is also pretty high, but then Brisbane close behind, ahead of Melbourne. Melbourne's great value for money at the moment because it hasn't had that growth that Perth, Adelaide, Brisbane have had in the last 2 years.
But Melbourne historically has had very low rental yields. That's the downer most people run into, and they say, well, I don't have the affordability for it.
Yeah, and it's also got the worst state government in the country, undoubtedly, in my humble opinion. And they've just handed down this week their latest state budget, and their debt is the highest by far in the country. They've just added to it. They're a big spending government. They've got huge taxation impost on the property industry, the highest land tax, the highest stamp duty. They keep finding new taxes or increasing existing ones. It's not a terribly attractive equation for investors. The only thing you have to say in favour of Melbourne and regional Victoria is that the buying is good value for money buying. If you can overcome those other negatives like the taxes and the general state of the state economy, then there is an opportunity to buy well at least.
But it makes you wonder, right? Why should investors have to pay, say, that COVID levy of $750? I believe it goes well into the 2030s. And why should investors pay for it?
Well, indeed. And also the emergency services levy and a whole host. There's more taxes in Victoria than anywhere else in the country. And I've just seen the figures comparing the tax take in Victoria this coming financial year compared to the existing one, and everything's increasing: stamp duty, land tax, the emergency services levy, the windfall gains tax, the tax to try and force people who are using Airbnb to go with permanent tenants. All those taxes, they're all increasing in terms of the tax take in Victoria. And they're not doing the tenants of Melbourne and Victoria any favours with that, nor are they doing their overall state economy any favours.
What does it mean for investors looking to buy in Melbourne? So I know it's good value for money right now, but with the state government levying all these taxes, all like land tax and COVID levy or
compliance
costs and all of that. So why should someone even consider buying in such a market?
Well, yeah, I mean, you certainly hesitate to do so. The only reason you'll do it is you think there's an opportunity to buy well and get some good capital growth, and you're willing to wear those cost burdens along the way. So some people will make that decision, I'm willing to take that on. Others will say, no, it's too hard. In fact, we've seen investors exiting Victoria. According to some of the official numbers, Victoria's lost 24,000 rentals in the last 12 months, and investors just selling up and getting out. And I understand that. For some people, they just can't afford those extra costs. It can cost, a young investor, it might cost somewhere between $1,000 and $2,000 out of their own pocket to support a rental property in Victoria, because with all the taxes and the relatively low rentals, the rentals just don't cover the cost of ownership. So they've got to put in substantial amounts of their own money. If you're a family with kids, you probably can't afford to do that, so you sell it. If you're a young person starting out, same story. So Victoria's losing rentals, and
could this put an upward pressure on rentals, rental income?
It has to, and it is doing so. So maybe those yields will catch up as a combination of all those factors over the next 1 to 2 years. But you're right. Right now, the rental yields in Victoria aren't as good as other parts of Australia.
And then talking about Sydney, it's the most expensive market. What's your forecast for Sydney?
Well, I don't have one for Sydney. I have one for individual parts of Sydney, because it comes back to that central point about real estate being so local. I mean, if you look at the generalised numbers, in the last 12 months or so, Sydney house prices have risen 2 or 3% on average. But within Greater Sydney, there are markets that have done much better. There's markets that have risen 10, 15%. And the task is to find those ones that are outperforming and understand why. This is one example. We do note that we tend to think in local government areas, not individual suburbs, because, clusters of suburbs make sense to us, rather than trying to pinpoint one individual suburb that's going to do better than all the ones around it. And the city of Canterbury Bankstown is one that's really outperformed in Greater Sydney in the last year or so. And it does offer relative affordability. It's a pretty good location. It's got good basic infrastructure. And for small units, people can, the suburbs there, when people can buy in the 400,000s, not too many parts of Sydney where you can get a property below 500,000, but in some of the unit markets and some of those Canterbury Bankstown suburbs like Kimba, for example, and they're having really good growth, well above the Sydney average. And that's the key message: affordability rules. People will buy and rent where they can afford. They may all aspire to live in Mossman, but less than 1% can afford that. People go where the affordability takes them. And if there's, train links and there's good basic infrastructure and there's close to where they work perhaps, or they're working remotely, then those affordable areas make sense.
Actually, I have a question for you, Terry. Western Sydney, though, with the new airport coming, do you believe the growth will come before the airport's ready or after that's been established next year?
Well, I do think both. And it's really not so much about the airport, but everything that we built around it. They're creating, they're calling it the Aerotropolis, but it is quite extraordinary when you see the numbers. I did a kind of a broadcast on that, a podcast last year, and I remember saying that what's happening out there is like putting property market on steroids, because there are tens of thousands of jobs in building it. There are more jobs in running it when it's all there, because there's a university campus, there's a hospital precinct, there's all the commercial and industrial businesses that will spring up around an airport, because if you look at any airport in the country, they're surrounded by businesses that want to be close to a major airport. So it's going to be the biggest jobs node in Australia when it's all done. And people like to live close to where they're working. So Western Sydney's property market, median price for a house in Blacktown's already over $1 million now, but it's not going to get any cheaper because of that massive piece of infrastructure and everything that it entails. The transport links, they're building motorways, they're building rail links. It's a lot more than an airport.
Well, there are some low socioeconomic pockets, and people might look down upon those, or, they might say, oh, the crime rate is really high. But I understand that has no bearing on capital growth, really, does it?
It really doesn't. Again, it comes down to the affordability thing. And some investors sort of obsess over some of these statistics that really are irrelevant. They worry about the local incomes are low, or the crime rate's a bit above average, or there's some sort of stigma attached to a particular location. But these are the areas that very often outperform, and we've certainly seen that across Greater Sydney. It's those cheaper, often stigmatised areas that have actually shown the best growth, because they offer affordability, provided the infrastructure is basically good. People need schools, they need shops, public transport. If that's there and it's affordable, then people are going to buy there. They don't care. They're probably not reading the crime statistics anyway, but, it's not like people are being gunned down on the streets anywhere in Sydney on a daily basis. It's not New York. So those sorts of stats, we never consider the crime stats or the local income levels. Just don't think they're relevant in terms of capital growth.
And Terry, Hotspotting as a team, as a business, obviously you're doing some remarkable work with research and all. Like, what's your methodology? How do you go on about finding these gems?
Yeah, well, we're researching every day. We have news feeds, we have various methods of gathering information, statistical data, but we're really looking for information about economies. So we're scouring media for every day for information about, announcements about a new train line's being built, or they've started work on a hospital. Incidentally, like $1 billion hospital can be a game changer for a property market. Thousands of jobs in building it, maybe even 5,000 or 6,000 jobs in running it when it's finished. So there's a lasting impact. Those are the sorts of things we look for, because we know, where I'm sitting right now is about 30 minutes from the coast of the Sunshine Coast. That market was absolutely transformed by a $2 billion hospital development. There are other things happening as well, but that was the big game changer, because all 6,000 people work there every day. Many of them are highly paid medical professionals who came from other parts of Australia to live on the Sunshine Coast and work in that facility. Some came from overseas. Really pumped up the property market big time. But right now, there's quite a few big projects like that happening around Australia. So you want a simple formula for success in terms of choosing the right place to buy. Find out where the $1 billion hospital projects are happening. Toowoomba in Queensland is one of them. Bundaberg in Queensland is another. Frankston in metropolitan Melbourne has one. There's quite a few, and they are very influential. So that's the sort of thing that we look for, far more than studying what's happening with prices at the moment. We kind of see that as being irrelevant. We're looking to the future all the time.
Well, let me tell you, Terry, that was one of our drivers when we were researching Melbourne or where to buy in Melbourne. And we realized, like, say, city of Brimbank, suburbs of Deer Park and surrounds, like, there's not much happening there. Like, there's no hospitals, that city council's not investing much in it. So that would potentially impact growth despite the proximity to the city, right?
Yeah, absolutely. So in our current edition of National Top 10 Best Buys, we've included the city of Frankston. Affordable relative to other parts of Melbourne, close to the bay, rail links, motorway, major jobs nodes down that part of Melbourne. And the big kicker is a hospital they've started to build with costing over $1 billion. And we know what impact that's going to have. And we know that anecdotally, talking to buyers agents and investors who've shown an interest in buying down there, it's become very competitive. It's probably the most competitive market in Melbourne right now. And people who wanted to buy there are getting outbid at auctions and getting frustrated because, that part of Melbourne's turning into what we've been seeing in Perth recently.
Oh, absolutely. There's multiple offer situations at any open home, 25 to 30 groups through at any one point in time. And it's really picked up in the last 6 to 9 months.
Yeah. Yes, absolutely. So we're starting to see that happen, the rising sales activity in Melbourne. But I think that pocket of Greater Melbourne is probably the busiest for specific reasons.
Absolutely.
And Terry, if any of our audience or listeners want to get to Hotspotting, get the reports, how can they go on about it?
Well, the website is hotspotting.com.au, and you can go there. And we have what we call a tasting room. I got that idea from when I was last in Adelaide, which, as I said earlier, I think it's a remarkable city. The 3 noted wine districts within Cooey of Adelaide, and they each have a tasting room. And they're hoping you'll sign up to their wine club at the end of an hour of tasting, which people are probably amenable to do after an hour of wine tasting. But I thought it was a great concept for our website. So you can go to the tasting room and have a little sample of all the different products and reports that we offer. We offer mentoring and strategy sessions. We have different types of membership. And you can go and get a little a taste of all of those things in the tasting room, and then perhaps make a choice about what works best for you and what it will cost. And if anyone wants to contact me, it's just Ryder, RYDER, at hotspotting.com.au. If you've got a question, we're happy to respond.
Great. Thank you so much, Terry.
Thanks so much, Terry. It was so great to have you. And to our listeners, thanks for listening. Join us next time for another episode of Property Addicts Australia. Thanks, Terry.
You're welcome. It's been great talking about real estate with you.
Thank you.
Thank you. We hope this episode helped you cut through the noise and understand what really drives property markets. Terry's insights were a great reminder that it's not about chasing trends, but it's about knowing what to look for and where. If you found this valuable, share it with a friend, and we'd love it if you left us a review. Thanks for listening. Join us next time for another episode of the Property Addicts Australia podcast.
Thanks for listening to Property Addicts Australia. For future episodes, click follow. Leaving a review helps others find the podcast. And for more information about how we can help you, visit propertytwins.com.au.